One of the senior guys turned around and said, why can't we build this ourselves? So you've just said this is 600 lines of code. You said it's permissionless, so anybody can create anything, anybody can copy it. Why wouldn't we do this? That was a light bulb moment that went off in the bank to say that we could build this, but do we want to be able to manage a blockchain, manage liquidity, manage smart contract risk, or do we want to use a global pooled liquidity? There's this saying is like, crypto is dead, long live blockchain. The infrastructure is actually the value, whether it's the internet or whether it's AI. Look at this technology, how exciting it is. And the world doesn't really grab the value. And I think crypto has gone through that to the point now where infrastructure, staking has been seen now as an institutional infrastructure product. Stablecoins, and we believe credit is next. Dennis Bree, Head of Institutional Sales and Growth at Morpho.
Welcome to Onchain Capital, your front row seat to the future of finance, from Web3 and AI innovation and digital asset policy to the power shift between East and West. Today, we're unpacking it all with Dennis Bree, Head of Institutional Sales and Growth at Morpho. Dennis, so good to have you on the show.
Good to be on the show. Thanks for having me.
So I wanted to tell you this ahead of time, right? So when I interview a guest, obviously I do some background research on the guest, their journey, and so on. And many of my guests that I have brought on to the show so far, typically come from a traditional finance industry, got the itch and then jump into crypto and then now digital assets. Your careers are quite different. I mean, you spent a lot of time at Red Bull, then you spent time at Twitter, then at Figment, which is now in the digital asset space, and then now Morpho. So help us understand, what was that journey like going from kind of ads and extreme sports and all the way now to the crypto and DeFi side of things?
Yeah, it's interesting. There was a specific moment in my life, or a fork, where I was about to head to my first banking job in London. I just finished college in Dublin, and my younger brother was an Olympic swimmer. He was sponsored by Red Bull, and I had this Swiss guy come to me, and he said, "What do you think about doing after college?" And I said, "Oh, I'm going into investment banking in London." And he looked at me and he was like, "That doesn't sound very fun. Be part of the team that brings like Red Bull into Europe." And I was like, "What's Red Bull?" So it started from there. I think for that summer, I was kind of managing the teams in Beatles with the can at the back, and I was very much working with what was like an FMCG startup at the time. Red Bull was just coming into Ireland. It was going into the UK, and I think it had been in a couple of European countries, but very small. So that transition was interesting, and kind of like in some of your earlier jobs, you learn more about what not to do than what to do. But it gave me a really interesting lesson in terms of a new product and bring it into the market in a completely different industry. So I spent time there, and after that, Twitter was starting up in Europe. So they had just landed the team in Dublin. They were building their European base, and I went in as one of the leaders to start building out the UK team, the UK sales team, and the European sales team. And so you talk about ads. Really, the monetization of Twitter was in its early stages, and so really kind of understanding what were the right products, what were the right advertisers, and what was the right go-to-market motion. So did that for 8 years. Halfway through that tenure, I moved to New York, and then ran some US sales teams in New York. And one of the verticals we were looking after was actually crypto, and we saw companies spending lots of money and investing in these ads, specifically driving users to their apps. And I was personally involved with crypto at the time, and I was super interested in the thesis. And as I saw this kind of collectively grow and grow and grow, really kind of my passion for blockchain technology and infrastructure started to grow, and so I made the leap into Figment. And so with Figment at the time, it was really a niche crypto product that built into institutional infrastructure. Over the course of, I started in 2021 and finished in 2025. And so that 4 years was under a very restrictive regulatory environment. So it was really interesting talking to institutions about that. And after after 4 years of institutional infrastructure within staking specifically, I saw the opportunity within credit and joined Morpho this year. So that's the journey.
That's really interesting. I mean, from the outside, just looking at the companies, right? They're entirely in different industries. But I can certainly see from what you just shared, there's a common thread, right? There's this notion of bringing something new to the industry, bringing something new to a particular region, and then growing it from there. So I'm certain you're going to share a lot about what you're doing now at Morpho and some of the strategy. But before we do that, I want to ask, right? So disclaimer, right? I'm a Morpho user. I primarily use it through Coinbase, and when it first became a product under Coinbase, I started looking into it, and I looked at the crypto-backed loans. A lot of users were kind of borrowing cash against their Bitcoin, and all of that was running on Morpho's infrastructure behind the scene, right? So by the time I saw it, it was already a Morpho product rather than the infrastructure that were happening there. Like, take me through that whole motion of working with one of the largest exchanges in the world. Is it about kind of selling them infrastructure software, or was it about finding the product market fit and finding distribution?
Yeah, good question. So let me kind of start with what Morpho is simply. So Morpho is this open credit infrastructure connecting lenders and borrowers.
Right.
The founders had a thesis that the credit system was broken. Essentially, it was highly fragmented. There was variations of pooled capital that allowed access based on certain segmented and custom requirements. And so the infrastructure and the vision that Paul and the team has is, how do we create a global open network where lenders and borrowers can come together and meet each other through trust signals? So do you trust me in order to be able to lend to me? And what do I need to be able to show you as a signal for that trust to be bought or to be exchanged? So as infrastructure, the credit infrastructure connecting lenders and borrowers, the protocol, which is Morpho Blue, around 600 lines of code, handles markets, accounting, settlement, while entities and businesses come in and provide capital, manage risk, and own the customer experience and relationship. So a user can access Morpho through a familiar platform like Coinbase, like you mentioned, without interacting directly with the DeFi application. What's interesting in my experience with Figment was crypto was always trying to make institutions use like crypto native, like come into crypto. Right. Institutions were never going to do that.
Yeah.
Institutions were curious about, what tools do you have to be able to help me manage my business more effectively? And I think what we're seeing now is the proof points of like Coinbase, Kraken, and even Robinhood. You're abstracting away the complexity of infrastructure and DeFi, and the user experience then is very simple and intuitive in terms of, I need to earn yield, or I would like to be able to use my collateral to borrow against. And doing that in the simplest way possible is the goal of Morpho.
That's amazing. So the notion of kind of bridging the gap between these very large institutions that may be very cautious, very skeptical, but then certainly see the growth in this entire industry, especially on the DeFi kind of TVL side, and then really bringing that user experience. So I remember watching one of your other interviews before. You've kind of coined this phrase, Morpho is like the AWS for on-chain credit, right? And being someone like myself that came from the infrastructure side, especially kind of through that whole cloud computing phase, that resonates a lot to me. Maybe you can talk a little bit about that in terms of the strategy. And I mean, AWS, right? It's a cloud computing platform. So are you looking at the on-chain credit as an infrastructure that Morpho is doing, and rather than directly approaching the users, as you mentioned, is more of an institutional gateway?
When we talk to large institutions like banks, and there's a specific story I can share where I sat in a room with about 25 different people, all different teams within a bank, and it was let's learn about Morpho and understand how we could apply ourselves to this infrastructure. And there were some senior people at the meeting, and they were understanding Morpho for the first time. So as we got through the fundamentals of Morpho, one of the senior guys turned around and said, why can't we build this ourselves? So you've just said this is 600 lines of code. You said it's permissionless, so anybody can create anything, anybody can copy it. Why wouldn't we do this? And it was such an interesting question, Sean, then to watch the dynamic of like what happened next, because it wasn't my job to give him necessarily a rebuttal. I think it was actually a really good question. And so we then kind of said, well, let's discuss it. And what then I observed was the room really kind of separating the infrastructure so the network from the credit product, right?
Right.
So
Right.
this bank was world class at creating credit products and managing their customer base around that. They had the brand, they had the trust, and they had the strategies to be able to monetize these products. The network is different. While they had their own network, which was billions in supply and demand, that sat within the four walls of their brand.
Right.
And so when they were thinking about growth and new opportunity, when you're neutral infrastructure, you bring liquidity pools from Kraken, Coinbase, a large bank in Asia, a large bank in the US, and all of those players have access to all of that capital and all of that credit. And that was a light bulb moment that went off in the bank to say that we could build this, but do we want to be able to manage a blockchain, manage liquidity, manage smart contract risk, manage how we think about kind of applying our KYC, et cetera, and compliance and regulatory framework to that? Or do we want to use a global pooled liquidity in which we can then get the benefit of our brand and our customers, but actually access a lot more opportunity? So with Morpho, one of the things that I thought was most appealing is that we are the institutional toolbox for credit. We're not just one pooled, isolated lending protocol. We've constructed Morpho so that markets are isolated and independent curators and builders choose how their capital is allocated and packaged. So the tools exist there for a bank to come on and create different or on-chain versions of off-chain products and access global liquidity, not just their current customer base.
Interesting. Okay, so let me double click a little bit about some of the product that you have brought up, right? So I was reading about Morpho Midnight, right? So my recollection of Morpho has always been it's a fluctuating rate, and essentially as a user you can choose whether to deploy or not, and then you can obviously withdraw at any moment in time. Core thesis to DeFi. But now you're looking at bringing kind of fixed rate, fixed maturities on chain, really for the first time at this scale, right? At this network scale.
Right.
That must be something that is extremely difficult to manage, especially given that a lot of your partners and clients are these very super large institutions. So take me kind of through that, because that to me was a light bulb moment to be like, DeFi is now entering the maturity stage.
I mean, we're extremely excited about this. The team have been working on it for a long time. It was publicly launched yesterday, and over the course of the next couple of months, we'll be building liquidity in the markets. So let's kind of talk about Midnight.
Yeah.
Fixed rate and fixed term is how banks manage their business.
That's right. Yes.
Right. So it's all about the credit products with consistency and confidence, knowing what they're going to pay and knowing when that's going to be paid back. Morpho, prior to Midnight, did not operate like that. That was an open term redemption. It was a variable and fluctuating rates. And so when I was previously talking to banks about that, there was just to reconcile how that would work was a large gap, right?
Right.
So banks generally need to know the cost of return or the duration of exposure in advance. And now with Midnight, it lets market participants kind of quote those terms directly rather than continuously accept a changing rate, which is generated by utilization. That's Morpho Blue. And so to be clear, Midnight does not replace Blue. When we think about releasing products, we're enhancing the products that we have or thinking about how we add complements to the existing protocol stack. So when you think about Blue, the protocol today is useful when flexibility and immediate liquidity is required. Midnight is useful when price and maturity need to be certain. So they reinforce each other because capital can remain productive in variable rates, but then that capital can sit there and then you can look for quotes in fixed rate opportunities. And when someone takes up that opportunity, then that capital can move. So they work together.
Okay, so let's talk about that though, right? Because one of the things that I've always thought about is, with the banks, you have your term deposits and, 3 months, 6 months, whatever it is, right? You know exactly what it is. You lock your funds away. I mean, your funds are locked away in the banks anyways, right? Like, I think most people still are trying to grasp that idea that, it's my money. No, actually, it's not your money. The bank holds it now. But in any case, those kind of patterns are very common. And I've always thought that DeFi, the ability to put your money in, take your money out at really at any time because you are customizing your own asset. That was like some massive, like that's such a new innovation that the banks cannot offer. But now what you're saying is this Midnight product is actually going that way. So when you're going back to your earlier conversation with the banks, when you're now going into these banks, and I mean, wouldn't the product team again going back and said, wait, I already offer that. So what is this?
Sure. So you do offer it, but being able to offer it at atomic settlement speeds, being able to, for every customer or everyone to be able to see those transactions in terms of full transparency, like what is the buyer opportunity market, what are the products that are available at a global scale. So yes, I mean we want our partners to be able to remain responsible for licensing, KYC of their customers, regulatory eligibility, disclosures, and bring everything that they've built over the last number of decades. And how does that then fit in terms of an on-chain world? Because the ability to be able to create new products, or let's talk about that being a specific example. So imagine that you are a merchant and you want to access capital over a Saturday and a Sunday. You can't because Swift stops on Friday and then restarts on Monday. So you know that your acquiring bank has these receivables. They understand what you're bringing in on a Saturday and Sunday. They understand that it's either higher or the same as Monday to Friday, but you actually can't access that. You can't access that to Monday. And so that's one of the current restrictions of the current financial setup. What if you were to create a market in which your receivables were exposed in a limited way to the borrowers that could come in and look at them, look at those receivables and say, this is a highly successful business. They can't access capital on a Saturday and Sunday. I will lend against that for a rate, and I will use Morpho to do that. And once the repayments or the receivables come in on a Monday, then I will be paid first and the merchant will be paid second. That's just an example, Sean, of some of the things that we're thinking about that on-chain can do that off-chain can't do. So to your example, in terms of a banker thinking, well, we can do fixed products ourselves. You can, but you can also offer those fixed products to a much larger audience using Morpho, and there's constructs of new product types that you could possibly do on chain that you just wouldn't be able to do off chain.
It's really interesting to hear you really dissect that in such a concise manner. It draws back to one of my earlier guests, Sandy from Franklin Templeton, and when she was talking about the Benji product. And I asked her something very similar. Now, obviously, Franklin Templeton is a traditional financial institution. She also said, look, just because a product is there doesn't mean you can continue to innovate it. And a lot of it, exactly to your point, is about efficiency, but it's about 24/7 access. So there is a lot more of that innovation that are going into that space rather than entirely new product, but it's a different experience to the product.
Right.
And I think that really emphasized on what you're talking about. So, okay, so touching on that, what I want to then think about is, okay, so the banks are obviously, doing a lot of these investigating, exploring, building prototypes, piloting and whatnot. Obviously, the regulatory environment in the US have dramatically changed from the last administration. So they're much more open in trying these things, and thereby Morpho and yourself kind of working very closely with them. What I'm thinking though is, on the other side, you still hear a lot of the banks are saying, look, they're telling Congress, right, like stablecoin lending drains the deposits and credit from the real economy. And isn't that like a very, very conflicting views on both sides, like products on this side, but then also they're like, hey, really need to protect my turf. Like where do you see that all of that going, especially given where things are from a regulatory perspective?
I mean, I think the settlement layer of finance is not moving to 24/7. Stablecoins are a vital part of that. And we see this kind of settlement network of the world moving to 24/7. Stablecoins being the payment infrastructure to do that. And then once we have this payment infrastructure and a method of payment, then when you hold that, then you think about, well, what's the utility around that? And every form of payment has in some way found a utility, which is like, how can I use that to be able to offer or give credit? And so what's interesting in terms of regulation, we talked about the last 4 years specifically in the US, and I remember traveling across the globe and spending time, and crypto, it's like the crypto industry just looked at regulation as saying, like, once this is solved, then everything is going to be great. I do see stable coins as actually being the highest value object for the crypto industry to be able to really demonstrate the solution to the problem. When NFTs were being launched or people were trading these coins, this didn't feel like a utility that was and like valuable for the world. We had this there's this saying is like crypto is dead, long live blockchain, because the infrastructure is actually the value in my mind. It's like that's in every industry that whether it's the internet or whether it's AI, look at this technology, how exciting it is, and the world doesn't really grab the value. And I think crypto has gone through that to the point now where staking has been seen now as an institutional infrastructure product. Stable coins, and we believe credit is next. So I think policymakers are increasingly regulating specific activities rather than treating every digital asset as just one category. That for me is the big shift. And the US now has a federal framework for stablecoin issuers and more explicit positions on tokenized securities, which is great. Europe has MiCA alongside existing security rules. And that creates clear routes into production. It's not a blanket approval for every DeFi product, but we know that the SEC is actively looking at components of DeFi, trying to understand this and think about common sense regulation.
So following on that, I mean, at the time of recording, we're almost late July now, and the Clarity Act is still on the table, right? There's still active debates on all sides, and it looks increasingly highly unlikely that the bill would get passed. So there's one of the sticking point in the bill is really about kind of stablecoin yield, right? Like whether you can directly pass yield, can you do it through an intermediary, what kind of intermediary can that be, and so on and so forth. And with it looking unlikely, knock on wood on that, but unlikely to pass, how does that affect, some of the largest partnering clients that you're working with, the Coinbase Krakens of the world? If that doesn't go anywhere and there's no clarity, is it just business as usual because it's already, there's already all these earned products already in place, or do you think it's going to go into a different direction?
I think with the innovation of technology, we will always find players that will bring the technology, demonstrate the value, and once that value then is adopted, regulators will then step in. Whether we have real clarity over the course of the next couple of months or not, I think the difference is if we don't have continue to have traditional institutions approach this in a way in which their regulatory, legal, and compliance team are at the front interpreting and dictating what they can't do as a consequence of ambiguity. If we do have it, we have the commercial and the innovators and the builders operating on known guidelines and regulation and being able to move faster. I don't think it stops en masse innovation or adoption. We've seen Bridge, which is part of the Stripe family, introduce OUSD with a very impressive conglomerate of partners. We've seen, the success with Circle and USD, as well as other coins. And so I think it's generally accepted that there is huge value in stable coins. And as we continue to defragment credit and payments globally, they're only going to play a more central role. So whether we have it over the next couple of months or not, I ultimately think it just changed the positionings of the teams that kind of lead the strategy versus holding us up further from any innovation.
Yeah, that's a really good point. I sure hope that is the case, and I think from my guests that have come on the show, that I think most of them share, very similar point of view that the train's already left the station, right? It's already going. It's just whether we're going faster or maybe we slow down a little bit because we're approaching another stop or whatnot. Excellent. Okay, so maybe the last question. So when I first got into the space, Aave was the big name, right? Like Aave was the platform, and Aave continues to operate with very significant TVL. So how does Morpho look at something like Aave? Is that still more of a retail-centric user experience and platform, even though obviously the TVL remains to be quite significant? Is it just a difference in terms of the target audience and target user between kind of what you guys are driving at, as well as what Aave is trying to do?
It's a good question, and we get this a lot. So Morpho separates the infrastructure from more of the product decisions. So we think of ourselves as a toolbox. Our markets are isolated. We have independent risk managers and curators. We have different builders in terms of oracles, wallet infra, chains, and those stakeholders come together to understand how capital is allocated and packaged using the tools of Morpho. Other lending protocols make those decisions internally. And I think this is one of the reasons that we see institutions leaning in a still guarded way, but with the understanding that they set the parameters of how they want to build their credit products.
They still have control, essentially.
They have control. That's the most important difference, I think. And Midnight goes further because it allows participants to determine rate and term directly.
Right.
So different architectures fit different products. So this isn't a claim that one design replaces every other one, but we essentially someone comes to us and says, hey, I want to have a lending product. With Morpho, there's more building and curation that needs to be done in order to be able to reflect the risk and yield parameters, term parameters that you want. And we bring a number of stakeholders in to do that, the best in the world. When you go to another lending protocol, a lot of that is set or predetermined, or there's one counterparty that decides it. Yeah.
Right.
And so we see through the stress events, because our markets are isolated, the stress events over the course of the last couple of months, there is very little contagion in Morpho because those markets remain isolated in terms of their liquidity. The loan asset and the collateral asset act as a pair. There is very little relationship between them and other markets. And so that isolated nature of contagion gives institutions a sandbox of relative safety depending on how they've set that up. But no lending protocol is risk-free. We want to ensure, though, that our builders are aware of the tools to be able to manage that according to their own profile.
Awesome. Dennis, before I talk to you, obviously, as I mentioned before, I am a user, so I know at least at a very basic level what the Morpho experience is like. But what you walk through with us today really dive into a lot more on the architecture, the strategy, the direction, and then also what's the fit for purpose that the entire product and architecture is really built for. So really exciting to hear what you're working on. The Midnight product sounds amazing. I'm going to look more further into it. In fact, I think that some of the businesses that I've been advising and working with, I'm going to advise them on looking into that as well. So again, thank you so much for coming onto this episode. I am sure the audience will agree that they've learned a lot from what you shared with us today.
Good. It was a pleasure. Thank you for having me, Sean. It's good to see you.
All right. Thank you so much. Take care. Bye-bye.
Okay. Take care. Bye-bye.